Hey folks, Dan Farrow here with your market update for January 21st, 2025. So it is now official. President Trump is back in office and he just launched a slew of executive orders. We're going to talk about that today, how that might be affecting interest rates. And then we're also going to take a deep dive. Where should interest rates actually be or mortgage rates actually be? And how can we monitor those and actually predict with some certainty where they're going to be in the next 3 to 6 months? That's what we're going to take a dive into today. So let's get over to the news. Here's mortgage rates. They were basically stabilized on Friday. I think the markets were just waiting for the inauguration to take place and then to see what President Trump was going to do with all the tariffs and everything else that he's doing, and that is taking place today. So he's officially in, but a lot of things are now being put into action. So mortgage rates, here's where they are. We'll get back to that in a second. So here's what's happening behind the scenes. President Trump is setting off a wave of executive orders. A lot of them are pertaining to the energy sector, the border, but some of these are also infecting inflation, and those are called tariffs. Okay, so if you haven't heard the word tariff yet, you've been under a rock. So how are tariffs really going to affect our inflation in the United States? Well, it's yet to be seen. A lot of people are saying, well, it's going to be detrimental to inflation. It's going to do this. It's going to do that. Well, he hasn't done anything yet, and are they going to be as bad as expected? Well, we're not going to know until it's actually put into place. So what I thought I'd do today is kind of give you historical data and the reasons behind and where should mortgage rates be today based on history. So let's get over to it. First thing we want to talk about right through here, though, is what's on the economic calendar for this week. And this is really why I'm doing this video today, because there's really nothing here. We had Monday, Martin Luther King Day, and the president's inauguration. Nothing on Tuesday. Wednesday, we have a bond auction. On Thursday, we have initial jobless claims, and that's about it. So let's get over to figure out where mortgage rates are going to go over the next, well, let's at least talk about short term. So let's get over to here. Here's what the MBS market's doing today. Okay, so this is our starting point. The MBS is a mortgage bond that trades on Wall Street, and this is we follow to figure out what the yields are going with mortgage rates. Okay, so this is what's happening to the price of the bond. All you need to know through here is if the price of the bond goes up, mortgage rates are coming down. So right now the MBSs are up 15. So that means mortgage rates are going to ease a little bit. We might be in the 6 ranges by the end of the day, but who knows? We'll get that, and I'll show you that at the later part today. I'll do my closing bell video to let you guys know how the market's ended. But this is an MBS. This is a bond that trades on Wall Street, and the yield to this mortgage bond is the biggest component of your mortgage rate. Now, let's get over to it. Let's start some educational pieces. Now, let's get over to what the Federal Reserve does and what they're looking at. Okay, first off, here's the Federal Reserve's the interest rate that they control. They don't control your savings rate. They don't control your credit card rate. They don't control your car loans, and they surely don't control your mortgage rate. All they control is the federal funds rate, okay? And that is basically interbank lending. Okay, that's in a nutshell. So here's where it is today. All right, over through here, here's the inflation. This is the PCE. This is the number one gauge that the Federal Reserve monitors. It was 7% not too long ago, and now it's all the way down to 2.4. Okay, they wanted it to, and it's getting there. We have the unemployment rate right now at 4.1, which historically is very good, and we have GDP at a robust 3.1 growing. So that's all fantastic news for our economy. It's looking good. Let's get over to the CME FedWatch tool. Now, this is telling us what the Federal Reserve is proposed to do at the next few meetings. Well, we know from the last video or last clipping, federal funds rate is right here, 4.25 to 4.5, and there's a 99.97% chance it's going to stay there at the next meeting in January. That's coming out next week. Okay, then there's also a 71% chance it's going to stay there in March. Now, I'm not even going to go down to May because there's going to be a ton of data in by then, and we'll figure out what's going to happen at that point. Okay, so now here's what I did. I went over to ChatGPT, and I asked it this question. We know where the 10-year Treasury is, and everybody was freaking out that it was going to go to 5%. So I said, well, what is the historical spread between the 10-year Treasury and mortgage rates? Okay, and it says here, the spread between the 10-year Treasury and mortgage rates historically fluctuate, but it typically ranges between 1.5 and 2.5, okay? During periods of economic stability, the spread tends to narrow. Where during times of uncertainty and financial crisis, it spreads. So we came off inflation that was sky high. We came off a Fed saying we're going to inflict pain to everybody and corporations and people with unemployment and all the other stuff. So we were financial uncertainty right through here. So that would make sense that the spread is 2.5% on the high end. Okay, so now let's get over the 10-year Treasury. 10-year Treasury is currently sitting right now at 4.57%. Just a week ago, it was 4.78. So it's down 20 basis points. That's a pretty hefty move within just a week's time. Okay, so this is what's going on. So let's take the worst case scenario that we're seeing right through here. 2.5% plus 4.5% is 7. Okay, where are rates right now? 7%. So this is why I'm saying we are pretty much, or we should be basically maxed out right now, unless bond vigilantes come in and just take over the market. Okay, so right now I'm saying the 30-year fixed should be topped out. We should be at 7% and going down from here. That's my predictions. Okay, so as the economy starts to straighten out, as we get more and more data, the hope or the assumption would be, okay, a lot of the financial crisis is going to be worked out of the system. So now let's go back to say, let's even say the 10-year Treasury stays exactly where it is today, but we take out some of the risk. So let's just say some of the risk is, in historical terms, let's just say, well, let's take out some of this risk and just move this pendulum down to basically in the middle. Let's say the spread would be 2%. Okay, so again, we go back to here. 4.5 plus 2 is 6.5. So my expectations are over the next 30 to 60 days, or the next 3 to 6 months, we're going to see rates about 6.5%, and that's where the norm should be throughout 2025. Now, there'll be some fluctuations, here or there over the next 3 or 4 months. I want to be clear on that, 3 or 4 months. And then as financial data comes in, please continue to watch my show on a daily basis. I'll give you the news to let you know, is some of the risk threshold coming out of this? Or are we starting to stabilize and, the rates are coming down? You can see the 5-year Treasury, it's changing as we speak. So this is a good move down. So let's say if these continue to go down and we hit 4.3% on the 10-year Treasury or 4%, plus we have a little bit of ease in the markets on the risk tolerance. Mortgage rates, they can come down pretty fast based on some of this news. So please tune in every day so you can get your feel of what in the heck's going on with mortgage rates and the bond markets and the economy, because on this channel, we try to provide you the whys behind all your questions. So last but not least, let's get over to this thing. You ever apply for a mortgage or a car loan, and then all of a sudden you call your lender and you're like, what did you do? Did you sell my data? Because I applied for the loan, and now I got 400 phone calls and emails from people telling me that, they can offer me a car loan or a mortgage. Well, I need you to do one thing. If you want to stop those phone calls and emails, go to optoutprescreen.com. It's a free service. Just scroll down and you can opt out of all these, what they're called trigger leads. So last but not least, who am I? My name is Dan Frio. I'm actually a licensed loan officer in all 50 states as well as Puerto Rico. That's unique in itself, but the unique thing is my slogan, and let me give you my slogan and I'll tell you why. One application, one credit pool, and we're going to shop your loan to over 30 different lenders. How do we do that? Well, I work at ServBank. ServBank is one of the country's largest mortgage servicers. Okay, that's number one. And then also number two, we're also a large mortgage brokerage. So not only are we a huge mortgage servicing company, the number 10 largest in the country, we're also a mortgage broker, which is very unique in this industry. So that means I can give you one application, one credit pool, and shop your loan over 30 different lenders. So if you have the ability to shop loans on your own and you know enough about the mortgage system, please have fun. If you need some assistance, basically from application to keys in your hand, I'd love to be the person for you. So go to therateupdate.com. We have 3 features for you. One, you can hit the apply now button and get it rolling. Don't do that. Please stop. Don't do the application. Why? You need to call us. You need to vet us, or you need to schedule an appointment. We need to know your story, and you guys need to know about us. So schedule an appointment right through here, or scroll down to the bottom of the website, and you're going to see our 800 number as well as my email address. So you can give us a call at 844-775-5626, or you can reach me personally at dan@therateupdate.com. And please send your questions here. Just leave some comments down there. But if you really have a question, send it to me here. Add your phone number. Love to be able to chat with you to answer that question directly with you. So thanks for watching, guys. God bless. Stay warm this afternoon. I'll be back later this afternoon to show you how all this mess ends for the day. Take care, folks. See you then. Bye-bye.